Remember that the following content is just a summary of information available on the internet, generated by AI. Investing decisions carry risks. Walmart, full Q4 2025 earnings analysis and investment outlook. Walmart is the world's largest retail chain, operating in the consumer staple sector. The company's business model is based on selling essential goods, making it resilient to economic cycles. Walmart's key growth drivers include increasing market share in groceries, particularly among higher-income consumers, expanding its e-commerce and omnichannel strategy, and growing its presence in financial services and subscriptions, such as Walmart Plus. Financial forecasts for the coming years indicate steady revenue and earnings growth, albeit at a moderate pace. In fiscal year 2026, the company is expected to achieve EPS of $2.76 and revenue of $707.87 billion. In 2027, EPS is projected to rise to $3.09, with revenue reaching $738.12 billion. By 2028, Walmart's EPS is forecasted at $3.44, with revenue climbing to $780.36 billion. The Q4 2025 financial results show that Walmart reported total revenue of $180.6 billion, including a negative currency impact of $2.1 billion. Earnings per share (EPS) were 66 cents, down from 68 cents in Q4 2022. Operating income increased by 8.3% year-over-year, outpacing net sales growth of 4%. Adjusted operating income constant currency rose by 9.4%, compared to net sales growth of 5.2% in constant currency. Gross profit margin improved to 23.9%, up 53 basis points year-over-year. Walmart successfully improved operational efficiency and profitability, but the decline in EPS suggests rising cost pressures. The market reacted negatively to the earnings report, with pre-market stock price dropping to $97, a 7% decline from the previous day's $104. The stock's key technical levels are support at $93.46 and resistance at $104.0. The average cost basis for investors is $92.9. Recent market behavior indicates caution. On February 18th, Walmart saw a capital inflow of $30.1 million, suggesting optimism ahead of earnings. However, between February 11th and 14th, there were significant outflows, indicating potential profit-taking by institutional investors. Following the earnings release, further sell-offs are likely due to concerns over declining EPS, despite strong revenue and operating income growth. Analysts' average price target for Walmart is $107.74, with a low estimate of $91 and a high estimate of $120. Among analysts, 11 recommend strong buy, 29 suggest buy, and 3 recommend hold. While analyst sentiment remains positive, the market reaction to declining EPS could lead to downward revisions in forecasts. Potential risks for Walmart include a second consecutive EPS decline, which may signal sustained cost pressures. Rising operating expenses linked to logistics, technology, and e-commerce investments. Further stock price correction, as investors take profits following a strong rally. On the positive side, strong sales growth despite a challenging macroeconomic environment. Higher operating profitability, with income growing faster than revenue. A dominant position in groceries and consumer essentials, making Walmart more resilient to economic downturns. Walmart remains a strong long-term investment, but a short-term correction could present better buying opportunities. Reasons to buy Walmart now include its stability in the consumer staple sector, growth in e-commerce and grocery sales, and a stock price pullback that may create a more attractive entry point in the $93 to $95 range. However, reasons to wait include the EPS decline, potential continued sell-offs, and margin pressure in the short term. Overall, Walmart remains a dominant force in the retail industry, but short-term investors should consider whether the current valuation is attractive or if further weakness will provide a better entry point. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU, number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.